All right, good morning, everybody. Got a lot of things on the table today, and there's been a lot of questions from people about, hey, where do you think we're going from here, and what's going on? What should I be looking for? Um, Guys, right now, some of the smartest people out there, and I'm not putting myself in that category, but I'm saying we don't know. They don't know. We don't know. When there's a pattern or a setup or an opportunity, something that gives us guidance, it basically kind of gets filtered through the trading world, right? And everybody kind of hears about it. Today we have a lot of Fed speakers, all day long, nonstop, all the way into this evening. A lot of Fed speakers. And as you can see with the red bars coming across in finance juice, the European central bankers are at it right now. There are auctions today, and I'm a real fan of these auctions. I definitely pay attention to them more than I notice basically anybody else does. I don't care. But we got the big ones today. You know, we're talking the 10, the 30. So we're getting just about every part of the curve. The front end, IRX style, all the way out to like, the 10 and the 30. It's across the board. And more and more lately, we've seen that nobody's standing up to buy it. Right? What happens, when they don't take our debt? It's all about the jobs everywhere else. And that's on the table today. All right, so as you can see here, we got the 10-year, the 3-month, the 3-year, the 30-year, the 6-month, the 4-week. I mean, it's across the board, right? 11 for most of it, and then 11:30. There's no 1 o'clock auction today, which I really like. I kind of get a little frustrated with those 1 o'clock auctions. They happen so late in the day that it kind of kills any real opportunity for like 0 days and things like that. So I'm glad that we don't have one at 1 o'clock. Once we get past that 4-week auction, should be good to go at that point, right? So the curve is basically across the board. This is the front end, IRX. It's a juggernaut. The thing's just been a runaway machine since 2001. Or since 2002, I should say. Start of the year. It just took off. Never seen anything like that. If you look back, I've got this thing set, well, just about 8 years. 10 years. We didn't go back very far. There we go. So 2004 up into 06 and 07. 94. those spikes just kind of reminded me that, you know, if you kind of tie them in with when rate hike cycles ended, right? And it's all a big cycle. It's a big circle. It's like the, I don't know, run it back through your own imagination, the wheel of life kind of thing, right? Everything just flips around in circles. That was February of 1995, Feb 1. The hiking cycle ended. I don't know, another day. All right, let's back on task. All right, we're out here on a daily, and I have all these moving averages on here for a reason. We're coming into the 20 period moving average. We kind of hit the line last night, depending on which one you're looking at, right? The EMA or the SMA. Made contact with the 20 and pulled back. We're in a little bit of a, I hate to use the word squeeze because it confuses everybody, but we're in a little bit of a squeeze between the 10 and the 20. Right now, that's not the squeeze. You know, the Bollinger Band, Keltner Channel, that's a squeeze. So when I'm using that word, it's not in any way implying what, you know, the squeeze indicator. We're in between these two major moving averages, building into some compression. And right now we're IX10, sitting inside this big green bar. So we went from inside day to IX10, 2 attempts at a breakout that failed, testing against the 20. Persistence does beat resistance, but we're persistent to the downside and the upside. It's like I was saying at the start of this, don't feel bad if you can't get some kind of feel for, are we going up from here or are we going down from here? Because you're not the only one. Everybody out there right now is kind of on pause, trying to figure out, you know, what's the next step? What are we going to do? Are we seriously going to leg down significantly and get into those 3,400 area? Or are we going to rally back up and retest the 4,000 area? And it's okay to just say, I don't know, right? No shame in that game. There's nothing out there giving us a definitive signal one way or the other. So the 4-day moving average is right underneath this. When we are above the 4-period daily moving average, it's a part of the surge system, right? It's the 4-8 or the 4-10 moving average pair for surge. When you're above the 4 and moving farther away from the 4, then you're in an active surge environment. And when you're coming back down to the 4, then the surge is over, and it's kind of like a wave that washes up on the beach. Then it, all right, draws away back out. There was your 4 crossover. You tested the 4. We maintained above it in that surge. One more test. Now it looks like we're going to fail it and break through it, but this could just be another test. Kind of like a bouncer on a diver on a diving board bouncing. Volume's a little light this morning. That reminds me, speaking of light volume, yesterday, between 9:30 and 10, when you see this, and it doesn't have to be at the open, it can happen at any time. Even sometimes you'll find it happening, say, in the Globex on other products. But when you see this, especially in the S&P. Get out of everything and prepare for a move, right? Prepare for something to happen. The market was waiting on news. Everybody just kind of stopped trading, was hanging out, waiting for that news to come out, and then it made its move, right? This is the first 5-minute candle. It's the 5-minute opening range, and all we did for the first half hour of the day was absolutely nothing. We just dribbled back and forth inside that range until the news came out. Now, we don't always know what the news is going to be. This one we did, no big deal. We knew this one, but we don't always know what it is, right? And that's the point of me pointing this out. Even if you don't know what the news is that is coming, right? You might not know what everybody's waiting for, but you can obviously see that they're waiting on something. Now you can place your bets at that point, if you think we're going to go up or go down or whatever, but you're better off waiting for the news to come out, whatever the news happens to be. And that reversal yesterday came in at 10:30. It really started getting some flow at 11, and away we went, right? Midday reversal. With the auctions that we have on deck today, we absolutely are facing an opportunity for a midday reversal. So the volume's a little light, but not extreme. Just turn it off. We don't need it anymore. Mentioned it already. We're in an IX10 at this point. We're no longer just inside day. We're multiple days inside day. The longer this market stays inside day, the bigger the move when we finally come out of it. But we're not yet out of it. Break things down into a zone, kind of, give yourself levels to focus on. Our own Globex low to yesterday's high would be a zone to focus on, and then from our own Globex low to the low of yesterday would be a zone. I know these are two really big zones. If you wanted to break it down a little bit more, you could focus on, say, the daily pivot, or even just a little bit above that, the IB, the initial balance. So if you do initial balance to yesterday's high, and then IB down to Globex low, and then Globex low down to yesterday's low, that's 3 different zones to focus on. When you have a zone or a quadrant, you can use the quadrant tool to see if this move is done. And according to the tool, yes, we made the move. We're at 100%. It's done. Right, from the IB to Globex high, that's 100% of the move. It made it to 50%, paused at 50. Liquidation break, draw down to the next level. We're at the 200. Consolidation has ended. We have a TRB, and now we're break over with a Busby back to the upside. Old support becomes new resistance, so we're struggling at the 50 to get back through it. Retest perhaps of the daily pivot point, and then back up through the channel. At the very least, target back to VWAP, right? 37.86. The ADR right now is 2.5%. We have no market maker move, but we are still above the weekly pivot point. And this drawback this morning reached the 236. So it's the retracement level. The retracement's kind of important when you think about a pullback, because a pullback that goes too far is no longer a pullback, right? It's a change in market structure, change in sentiment. Now, the indicator that says 236, it's an automatic Fibonacci that's put on the chart. I didn't draw it. It's just there, which is why the numbers don't make sense, because it's drawn upside down. 236 instead of 786. But if we draw it by hand, you can see that it's really the 786 pullback. Needs to hold that 786. If we break and close below that, say on a half hour or an hourly chart, then the pullback would be too far, right? If we were looking at this yesterday, that wouldn't matter, right? So previous week's high is still the jam. Speaking of the previous week's high, while we're already talking about it, the weekly expected move, we're still outside of that box. All right, remember the box we talk about all the time. That green line is how high we should have gone this week. So we had that 2 standard deviation move in the first part of the week, Monday and Tuesday. A lot of that was based on bad news is good and good news is bad, right? On Monday we had bad news. Everybody cheered and thought, ooh, that's going to make the Fed pivot. On Tuesday we had really good news. Ooh, that sucks. That's going to make them maybe not want to pivot. And then one of the Fed speakers came out and she did a really good job of saying, nobody mentioned we were going to pivot. We have no intention of pivoting, and it's just a rumor, and we're not going to pivot, and we're not going to pause. And the market quit that insane little short covering rally, but we didn't dump back down, which is kind of a little bit of key at the moment. So keep your eye on 37.20 if we do happen to continue that fade back, because that'll put us back inside the box. A continued break to the downside, we'd have to retest our own Globex low. The cash open of yesterday at 37.60. Previous week's high at 37.50. ADR half, 37.47. A full ADR, if we can get through the next retracement level, the full ADR would be basically 37. So we could move to 37 today, and that would not be considered an extreme move. Right? It wouldn't even be bearish, which is why I was talking about how difficult it is at the moment to get a feel for the market. We're range bound, and it's not giving any signals, right? There's no promise of direction when we're consolidating in a range. To me, it really feels like a market waiting on a catalyst, right? Like, give me a reason, give me an excuse kind of thing. And very, very often, it's something we don't know that takes a market down, or something that we didn't see coming. But now it's going to be completely the opposite. The market's literally looking for a reason. And it doesn't have to be down either. It can be up. So speaking of upside, we could hit 39 today, and that would not be extreme either. That would be well within our boundaries of normal. 10-day, 30-minute volume profile. We're at the top of the box. We held at the top of that box, wasn't able to break through it, fell back down through a significant level of resistance through that 3800 area. We're back below the 3780. It's an area that I talked about multiple times this week, 3780. Point of control is a long ways off, sitting around 3670-ish, so about 100 points away. It's within our reach, but to get there, we would fall through this shallow area, work through a lot of volume resistance from basically 3720 all the way down to 3670. It'd be a 50-point slog through all of that volume, all that trash there. Interesting to note that this space here at 3730 that there's not a lot of volume there. I mean, there's a little bit, a little nub of volume there. But normally when we see a pivot point like that, we'd say, all right, well, that's, probably got a little bit of help or support. There's nothing there. So we can move through shallow areas really quick. And I would not look at that pivot as a pivot that has any real support to it, right? Or you might get like a first touch bounce, but then we just punch right through it. All right, 5-day, 5-minute volume profile. There's nothing to carry forward from the IX10 inside days. We've already hit all of those points of control. But we do have an untouched point of control at 3668-ish, right around in there. You could get more specific on your side. And that's basically all we got within our reach. Right, there are things to the upside. 3890, 3950, and 4000. But we're in a really tight draw. It might seem like we're really moving around, but so far we haven't done anything. Looking at the 10-week, we've got a lot of room that we could move, and we still wouldn't be considered outsized or having moved too far. Got some unfilled gaps to deal with. 3676. And we closed that gap from the 22nd. We closed it earlier this week. So that one's off the table. But we didn't close it for Apple yet. $142.5. Call it $147.5. All right, Bank of Japan still defending that 145. It's going to be epic. I mean, I'm really interested. It's almost like going to NASCAR, right, and watching the wreck unfold. You can see it coming. It's all in like a slow motion NASCAR wreck. We almost made it through parity in the euro dollar. Bitcoin can't seem to get past this break structure at 2050, 20,500. Now remember, with these FX pairs, you can trade the ETF equivalent, right? And there's still it's a less crowded space with a more consistent follow through in the current market environment, right? It's continuing to find things that we can trade that has some validity to it, something that's still moving with, some reasonably decent follow through. A lot going on in the crude and energy space in the last few days. I know there was a lot of talk seasonally about how elections interfere with the cost of crude, and there was not supposed to be a rally there until like after the midterm elections, and that seems to be off the table now. That it's like the rally's coming in a little early. I don't know that I necessarily believe that, right? We're in a high volatility environment, and it can look like we're getting the big move that we're looking for, and it could just be a big move because it's movement, right? Volatility, movement. So as much as I keep hearing that talk about, maybe the pivot came early and that we're not going to be waiting on the seasonally adjusted aim after the midterms, I would proceed with a little bit of caution. Volatility is picking up in there if you look at the volatility of crude, which is that OVX. Gold has a volatility indicator. Crude has volatility. So just a little bit of caution. Don't be don't go too heavy on it. One of the things that was really frustrating about the energy one is technical analysis wise, some really great names had some great short opportunities, and yet I wouldn't have wanted to take them simply because no matter how much the short looked great, there's too many external influences like the White House releasing strategic reserves or OPEC Plus deciding that they're going to cut production. There's all these things that you can't see on the chart that can greatly affect the cost of this thing. So at first, I had put out an alert that said, let's short this sucker because it's ready to go. By the end of the weekend, after I was done with my research, I backed all of that up and said, don't short it. Never mind. Stay out of the way because this doesn't look good. This looks like we're going to get a rush to the upside. And sure enough, we got the rush to the upside. So, yeah. The good thing is, though, is if we do get through, say, this significant level, the 100, nice round number, then we'll get into a whole new paradigm anyways, and we'll have an opportunity to go long. It'll be a whole new leg up, which would be great. So XLE is going to be coming into a weekly resistance right around $82. So you could get a nice reversal here. There's no moving averages overhead to be concerned with. We're not going to hit anything. There's nothing up there. And financials, XLF. Just keep in mind, financials have been front and center the whole Credit Suisse and earnings season really soon. That would be the 10-week. Close to that 50%. All right, things that are up this morning: natural gas, Bitcoin, NASDAQ volatility, bond volatility. The 2-year that's a pretty good continuation in natural gas. Still got a reasonably decent market makers move too. 3% is on the table. Real estate has a huge market makers move, 11% right now. And things that are down: oil and gas exploration, energy, building materials, uranium, and financials. Oil services, some real estate. Tech isn't down enough, right? The benchmark that I use is 0.5%, but it seems to be working to get up there. Remember, it's normally tech and finance, and what we've been seeing lately is tech versus finance. So like yesterday in that midday reversal that we had, we got finance on the left and tech on the right. That reversal in tech, real solid, really sharp, very clean run back up after closing that gap, or almost closing the gap. They missed it by like a few pennies. But finance really stalled out and didn't participate in the move until later in the day. struggled really hard with that VWAP before finally getting through it. Now, I was working through this yesterday and realized that breadth was still really negative yesterday. So while we had this reversal and this run back up, we didn't have breadth behind it. That can be a little confusing, but if you think it through, it makes perfect sense. A lot of institutions out there will trade with the futures, and they're trading those futures to hedge a position that they already have in options. So when we break out of the weekly expected move and we go to the upside, they have to buy into buying to get back to delta neutral. Well, if we're going up and that causes them to buy to get delta neutral, they are buying, which causes us to go up even more. Then they're no longer delta neutral. Then they have to buy more to get delta neutral, and they're adding to the buying, which is making us go up even more. But they're only buying in the futures. They're not buying like the algos across the board, so they're not getting into Apple and Microsoft and Tesla and into financials and into different sectors, right? They're not jumping through the basket. So the breadth wasn't there. We can see in finance here, we didn't have the financials backing us up. It was basically all tech. And yet breadth was still declining through the day. Here with the NASDAQ, or with the monsters of tech, after that midday reversal and we started to run back up, it took breadth almost another hour to start really coming up off the bottom of that line, right? It was past noon. And by the time we got even to zero and was starting to get into the positive, we were basically in power hour at that point. And it's worth noting that the cash open and hitting the high of that cash open, that first 5-minute candle, just getting back to that 5-minute candle is basically what it took to get back above zero. Green line leadership, but it never left the group, right? We had the green line breakaway. It looked like it was trying to separate, but it just never could pull it off. And it was matched neck and neck with the NYSE the whole time. So summarize all of this, right? Kind of put it into something actionable. If you don't want to get chewed up, set your alerts at the high point or the low point and look for this market to leave the range. Now, no argument from me. There is plenty of room in this range to trade. And I'm not saying that you shouldn't trade in there. But it could end up being a day that looks a lot like this. That the move is made really fast and really early, and that the rest of the day is just this chop. And price action like that, looking back, it might not look that bad. But when those candles are alive and they're moving around, and you have to use a real big stop just to avoid getting wicked out, it's almost not worth the effort, right? Unless you take your chart down to a real small time frame, step into a time frame that allows you to see inside of these really big candles, it's just not going to be worth it, right? But if we were to get an outsized move today, if we were to really start to get out of this pause that we're in, and we break the low here, it's very likely going to be one hell of a run that looks a lot like that. Same thing for the upside. If we happen to break up through this 3820 and really begin to expand, it could be a run, and expansion looks a lot like that. So if you're looking for a big catalyst move, you're not going to very often find a big catalyst move sitting inside that range. You're going to want to get out of the range first. At the very least, getting to the edges and then getting that rejection and running it back the other direction is a good play. For an example, yesterday, trying to close that gap, we finally got it closed way back here, because even that was a miss. Or closing this gap from 37.35. It was the rundown. Close the gap, and then the run up. I mean, it literally stopped, what, 2 ticks away from after the gap is closed? All right, we have no names to the upside more than 1% in the S&P. And only 8 names to the downside of more than 1% in the S&P. So nothing really negative out there, just certainly not positive either. And that was the S&P. So in the NASDAQ, 1 name, CGN, to the upside. And 6 names to the downside. JD, China name. Tesla's still fading off after the Twitter news, all that whole little wrapped up spiel. S&P down 0.5%, it's 35 names. Chip names lead the list. AMD, NVIDIA, Broadcom, Qualcomm, all semiconductor industry. All right, first 4 names on the list. Now, a lot of the day trades this year for me have been energy and finance. They're very often a lot cheaper companies. They've got really liquid option, great bid-ask spread. You know, you can get in and out on day trades, plenty of movement, and it doesn't seem as they're not so crowded, right? And they're not as expensive as trying to play options in tech. S&P 500. We want to look at pre-market change. Use a filter to knock this down so that we're sitting at around 100 names. It's not perfect, right? Just kind of get close. Change the multiplier so the color comes in sooner. We can see the monsters of tech because their size of box really stands out. Amazon, Microsoft, Google, Apple. The only thing that's, you know, in the green of any size today is Eli Lilly and ExxonMobil. A lot of names that aren't doing anything. That gray stands out this morning. I think it'd be worth watching healthcare today, right? Seeing this many that are flat, and even the red, they're not down much. And then a couple names that are positive. Could see a little bit of a turnaround, right? If we start to get that capital rotation. So that's the S&P. Flip it over to the NASDAQ. Do the same thing. Pre-market change. We don't need a filter. We'll just adjust the color scheme. Microsoft just turned into the green. We still got Apple, Amazon, Tesla, Google, Meta. I mean, go down the list. Only Microsoft is positive, and just slightly. It's not enough to even count it yet. 0.5% would be a good starting point. But again, health technology, there is some red in there to be sure, but it seems like there's some opportunity. Could see a reversal opportunity there. Yeah, see, a lot of these are coming right into resistance after one heck of a really nice run. So we don't want to short it just because it's gone a long ways, right? Like that's a really bad idea. Well, it's gone really far in one direction. Let's take it the other way. Start to look for a reversal and then take it the other way. Right? That'd be a good way to approach this. So this is XOP, and most of the names on this list would fit for a reversal. We just got to see that reversal come in first, right? Same thing with XLE. A lot of these same names are on both lists, but they're not completely the same. All right, so gap close in finance looks like it's on the table. We're already down more than 0.5%. Almost all of these have a gap that needs filled. Bank of America and Wells Fargo have reasonably decent options. I mean, you can't compare them to like SPY, but they're still pretty good. And at the very least, we're not looking for finance to, like crash and burn. We're talking about just getting this gap filled. So you could trade it down to close the gap, or you could wait for the gap to get filled and see if it's going to rally up from there or if it's going to continue to go down to the yearly lows, right? Kind of approach it from that point of view. If we start to reverse after the gap close, then you've already got your targets back up. The target will be at least the open of yesterday. So, you've got data points to focus on. So I got everybody, be careful, be safe. Be really careful today with these auctions. We got a lot, and they are the important ones. You know, sometimes the auctions, they're just kind of, yeah, they're not the ones that we're really concerned about. Today, they are the ones that we're concerned about. I'll see y'all tomorrow.